Welcome back to another episode of my trading vlog, where most of the views come from returning subscribers. If that's you, give yourself a thumbs up. If not, consider subscribing. I'm going to be talking about AMC and GameStop today pretty in depth. I have some new analysis, some fresh charts. I want to share those to get the week started. Of course, markets were closed today, but that's not bad. It gives me time to look at the charts and come up with something new to share. Hopefully, everyone finds this entertaining, or at least informative in some way. Remember, I'm just a vlogger and this is my opinion. Looking at AMC on the daily time frame first, you're going to see a horizontal triangle in blue. It's pretty clear to me that we're forming this sideways grind in waves of three, sets of three. Waves A, B, and C, where wave A is motive, B is corrective, and C is motive. That is to say, wave A will have 5 waves in it, wave B will have 3 waves in it, and wave C will have 5 waves in it. Thus giving us the alternation in the markets, the ABC. I do it all the time. I'll just take like a simple measured move tool here, like the Fibonacci extension, right? Boom, right there. A, the first down, break that high. Eventually you get to 722 for wave C, A, B, and C. Otherwise, I could do characterize it this way, where I use the ultimate low from B, in which case we got above 100, but below 809. And this downtrend was that place of rejection. You're never going to guess this, but that downtrend was set between 2 days that were very close together, August 11th and August 16th, just a trading week between them. And we didn't touch that downtrend for a long time until at that point where it broke. That can happen. I've seen it happen. I know those 2 points are only 5 days apart, and that trend line is going out for months, but crazier things have happened, right? It doesn't matter. That's where that trend reversal occurred. Would have been important to have that in mind. Typically, we see the price die between 100 and 161.8%. That's a good reason for it to do so, especially considering that there's some congestion through here. There's a significant level of support and resistance towards $8.19. I think between each opposing trend line touch, we have 3 more waves, forming wave A, B, C, D, and E. And that's why this is a horizontal triangle, is because the waveform between opposing trend line touches is in 3 waves, in A, B, and C. We should see a push higher up to about 518 for wave E, but that doesn't necessarily have to be the case. If we get a downward breakout from this pattern, then I'm just going to put a price target down and shoot for it. It's possible that we'll get a pullback if that is the case, and retest that level before pushing lower, or we'd see a whole reversal. It just depends on how wild the markets get. Overall, I think this is a pretty neutral place for the stock to be. And having seen 72 and what is this, $4, I think the prices of the meme stocks are stabilizing. They're about where they should be. And I don't know what that means in terms of MOAS. I know people are probably thinking about that. This is probably the quote bottom from that big downtrend. These prices seem to be about where they are. And yeah, I mean, AMC is probably overvalued, probably, as is GameStop. It's true. Nonetheless, there's a belief that they should have that value. Who am I to say? Who am I to say? On a fundamental level, AMC is still not panning out for me. Not nearly as much as GameStop is. And that's why I'm generally more bearish on AMC than GameStop, and more bullish on GameStop in general. At this point, I'm chasing PLBY for its fundamentals and what's happening there. And I'll get to that at the end of the video. But this was AMC going sideways. We're in a neutral position, waiting for a breakout to give a target. Not much to say. Let's go to GameStop. I haven't done a lot of proper GameStop analysis, so I wanted to put something together to just put it straight. Let's see here. I think I did on daily update. Yeah. Okay, so we had the big push up for A, B, and C, and then a horizontal triangle going sideways. There was an upward breakout at that time, and then price reversed before 2021, and we saw the price fall. I have characterized this in motive waves at the minor degree, 1, 2, 3, 4, and 5. I even have that 4-wave labeled A, B, and C, and you can see that this corrective wave also has a horizontal triangle, because that's how corrections extend, is with horizontal triangles. And so the meme stocks will almost always form that triangle. It's the most annoying thing ever. That's what the big grind was after those big pushes, just horizontal triangles. Nonetheless, moving on from there, coming out of that 5th minor wave, we formed that completed intermediate wave A, and I think this is the first wave. I should probably take this out, and I should probably revise this wave count and bring these up a degree. This is what I'm saying. The first wave of an ABC correction is motive. So this is A to some degree. and then we have a three-wave form through here forming B, and then we have a motive wave characterized by this channel for C, and I have that labeled at the primary degree. So primary wave A, B, and C, going pretty much flat, really. But it's a big trading range between $19, $20, and $47. That's a big range, right? Price is currently going to be trying to retrace some of that in a reactionary trend, looking for an ABC correction heading higher, and I have that shown here in blue at the intermediate degrees. And what I've done is I've labeled a triangle through here. It's a diagonal triangle, and it's much different and distinct from the horizontal triangle we're seeing in AMC. The reason for that is because its tilt, its relative wave position, and also the waveform between opposing trend line touches. When you see a rising diagonal in wave A, it's not necessarily a falling wedge. It can be what's called a leading diagonal triangle. Leading diagonal triangle. I called this an SLV, and that was a spectacular example. So I'm just going to go hop over there and give you a small view of what that looks like. Let me pull up the right chart drawings. I don't remember. I should have planned this out. I can edit this out. That's okay. On the hourly time frame. This is the leading diagonal triangle that I found in SLV. You can see this leading diagonal triangle. It's occurring at the bottom of a 5-count motive wave at the minor degree, and I show a new uptrend, showing a bull flag confirmation at 2014 and upward breakout from there. The price rising at the minute degree, here shown in white, 1, 2, 3, and I stopped counting there. I did. I stopped counting there, which is funny. I started a new chart and went on, but this was the chart pattern, leading diagonal triangle, where we have alternating waves of 5, 3, 5, 3, 5. And there was a downward breakout from here, so remember that too. Just because it's a leading diagonal triangle doesn't mean that you don't get the reactionary wave. You're going to get the reactionary wave because that leading diagonal triangle is motive in nature, and we're going to alternate between motive and corrective. And because it's wave A, it will be followed by a B wave, which is probably honestly through here and is some sort of flat. Not sure how I counted that. But as you can see, following that, SLV ran for quite a ways. I did trade this for a profit. I'd sold early. I was also on vacation in Hawaii at the time, so wasn't totally focused. Moving back into GameStop, this is that same chart pattern, and at this time frame, it doesn't make as much sense. Zooming back out into the daily time frame. Whew, here we go. What characterizes a leading diagonal triangle from like a rising wedge, perhaps, is this overlap between waves 1 and 4. This doesn't happen in motive waves. It's a rule. Waves 1, the retracement of wave 4 cannot push into the range of wave 1. When it does, and you're in a diagonal like this, you've really got to pay attention to that relative wave position and the waveform between alternating trend line touches. Did I say that right? It's a mouthful. Nonetheless, we've seen, I think, the first 5 waves of this thing pop out, and that might be the top of wave A. If that's correct, we're looking for a reactionary wave B, and who knows where that's going to fall. It's possible that we can just use a Fibonacci retracement tool and say maybe we go back down to 20 bucks. Who knows? There's probably some support and resistance through there. I want to say at 21. The alternative count here to make this bullish would be to have this be impulse 1, A, B, and C. And we're going 1 of 2, or 1 of 3, 2 of 3, 3 of 3, building into an extension of that 3 of 3, because waves 1 and 4 can't overlap in that count. That's the alternative really bullish count. Doesn't matter. It doesn't matter. What I want to say is, even if we come down to that $20 retracement level, the extension for this third wave extension, or wave C, depending on how you want to count it, again, there's going to be multiple counts all the time. You're looking at 37.94, which is really high. That's nothing to I wouldn't want to miss that. If we don't see another push below 23.93, what is this high right here, 23.99, if we bounce at that level, it'd be hard to say that we aren't going to go higher, because we probably are. And I would be using this little push here to say in the short term 29.53 or 32.93. So that 31.15 target looks really good to me. It does, as long as we don't get below that 23.99. I'm going to call this a bearish reversal, because remember, we can get that retracement, that reactionary wave, sending us down to about $20. That's where those lines are. And that's not, I think that's a pretty good analysis. That's a $3 range on a $23 stock. It's more than 10%. So these are pretty big ranges. That's why I like to use the daily time frame when I can. And you're gonna notice too that I don't use candles that often. I don't like to seeing the green and the red. I think the line chart's a little more clear. It takes out a lot of the data too, using only the close to chart to plot the price. Let's go take a look at PLBY 2 really quickly before I wrap this one up. I've been showing PLBY in a falling wedge through here. I want to go to my default charts. This is another example of a diagonal, and I think this one is ending a larger price trend. If we look carefully through here, I have some motive wave counts labeled out. I wonder if I did that on the weekly time frame. No, definitely not on the weekly. Was it like the 4 hour? Okay, it looks pretty good on the 4 hour, I guess. Zooming in here. Big diagonal pointing down, of course. I'm seeing a 3-wave form through here. Here's wave 4, A, B, and C. And then again, A, B, and C. A, B, and C. So I can make this 3-wave. It's probably actually wave 3 right there. 1, 2, 3, 4. And then wave 5 comes down and dies through here. I have some alternate counts up. I don't like those alternate counts. I really don't. I've been fussing over how I want to count this. I'm just going to get rid of that. And I'm going to make a decision and just say that wave 5 ends down here. This is it. And perfect. Then this count makes sense. A, B, and we're looking for wave C to pop up towards that $2 range. Yeah, that looks good. Okay, and what that does is that lets me establish that at this degree, which would be the primary degree, wave 5 is formed through a 3-wave pattern. 1, 2, 3, between opposing trendline touches. 1, 2, 3, 1, 2, 3. And sometimes you get 2 touch points along the same trend line before the price crosses the pattern. That can happen on wave B. So the move from 372 down to that trend line coming through there, this would be wave A, and then wave B would be this spinning against that downtrend, and we form that touch point along the upper trend line. Then wave C moves across the pattern. So A, B, C. A doesn't cross the pattern here, which is kind of problematic. It can be a little iffy. Maybe on a smaller time frame we would see that touch point. I'm not going to try to fuss with it too much right now. Going back into the 4 hour. Nonetheless, you're going to see another 3-wave form down for 5. It's hard to say that it's motive because this would be an ending diagonal triangle where we're signaling a reversal. I guess that's where it belongs. An ending diagonal triangle belongs in waves 5 or wave C. It looks weird because you're looking for a motive wave count through here because, you know, wave 5, but actually it's 3, 3, 3, 3, 3. 3, 3, 3, 3, 3. A, B, C, D, and E. So I should relabel this chart. I should relabel it. A, B, C, D, and E. We've seen the price break out above there and set a new low, which was curious. That happened in the 3-wave form as well, which is kind of forming its own falling wedge. And now we've seen the price break out, breaking this downtrend, which is from a long time ago. Let me go into the daily time frame. That downtrend starts at $41. So I believe that we are beginning the reactionary trend to the spill from 40 down to $1.42. Now remember that it's a reactionary trend. It's not a motive trend. It's reactionary, but it is from a massive push lower. If we get to that 224 level, we may backtest down to $2, and we could see this gap fill area at 323 filled, I think before the end of the year. I'm waiting for some very specific news for PLBY to announce that they are selling off Lovers and Honey Birdette. If they do that, that should push the company into a cash flow that is positive or neutral, in which case guidance will be revised, and we would then see probably analysts assigning a buy to it. And there are already analysts putting a $5 price target here on PLBY. So I don't feel bad targeting 323. What I'm doing is trying to use Elliott wave count to forecast how the price can get there. If it's valued at that price and the stock is undervalued, if it has attention drawn towards it for its improving balance sheet and it can push a profit, then boom. I believe this is how we're going to see that rally happen. I'm holding calls right now. They're still red, but most of my position is in shares. This last week I saw the value of those calls tick back up a little bit, which was nice, and we're starting to see volume come in too. Implied volatility hit an all-time low at 45%. We'll likely see that reverse as price starts to head higher and volume starts to re-enter the stock. You can see that we had a pretty high volume day on Friday before markets closed for the long weekend. Coming back into the short week, I'm not sure what that's going to mean. But again, I don't think it matters. We're just waiting for the news. So this has been a long one, kind of a deep dive, a lot of Elliott wave analysis. I haven't done like a really proper wave count on GameStop before. So doing that was pretty fun. It's nice to be able to put some bullish targets up too. Finding a leading diagonal triangle in wave A is incredible. If that pans out, whew, that's fantastic. I'm happy. Again, I'm not trading AMC and GameStop. I don't trade those because I cover them, and that can be a sticky business, I suppose. Not for me. I cashed out. I made money on those trades overall. And right now I'm holding PLBY, so I am trading that. So that's the full disclosure thing. Remember, you're responsible for your own trades. I'm just some dude on the internet. This is a vlog of what I understand. If you like this video, hit like, subscribe, join the Discord. Do what you want. I don't know.